Right, cool. We're live. Yep. All right. Justin. All right. So again, this is the New York session. Not much is going on. I'm gonna get straight into analyzing. Give me 1 second. All right. So again, this is the last week of this year, so there may be a lot of ranging movements, and the trend will not be that defined. But we're just gonna do with what we have. Yeah, this candle here does not seems good for a daily what is it, daily candlestick. This one here just indicate that there's a ton of selling pressure trying to push price down, but it's also a sign that that's the order consumption, and it's basically swallowing up a lot of sell side. And from this candle here at the moment, I can see that it's trying to push upside once again, so that's good. For a lot of things going on, but that wick here seems to break out the trend. Let's see if there's any candle that closes above it. If not, then I would consider that still be a continuation. I think it's almost a break. It's like an unofficial break, I would say. Um, but this from 1 hour here is closes above, and it's trying to come back down once again, and it's from the same area. But since it's break the previous high, I wouldn't really go straight into it. So the sign is there. So price right now is trying to rallying up. I'm gonna set my bias for today as bullish. And with that said, let's look for buys at the moment, or just see the structure, see how price is standing up in this support area here, making a really good trend, slowly upside, did not break any lows. 4 hour being respected, but it's a little bit deep of a dip right there. Just mark this up for my information so I know where the price is sitting at. It's about to end. This one here is forming 1 hour. There are a lot of things, honestly, to be on the lookout here, since the trend is technically technically broken. So I would say this 1 hour just for information purposes, and I would mark up the candle hint or the wick instead of the whole order block, as it's like a dynamic tick profit, dynamic line, what I need to pay attention to. Cool. We have inefficiencies here as well. It's just one thing to pay attention to, but it's not a major thing, I wouldn't say. That's a major line on the 1 hour, but it can also be retraced from here too. I'm just more lean towards the side here because it's a candlestick fill. So 1 hour, we have 1 hour OB. It's not really that great. Prices in complex pullback at the moment. There is no clear structure. Price did not break to previous high, remain the previous low. And so because the low has a defined trend, right, defined trend bounds, and the highs still struggles with basically breaking it and slowing and basically coming back down retrace. You see here, price come back down all the way down here to retrace. But I would say it's slowly trending upside once again. So what we're looking for right now is actually something different. Um, we're looking for right now is something one of a complex trend. I would say one of a complex trend. This 2 weeks upside here, you see how that broke and it come back down and it's shot straight through, come all the way downside here. Um, that's just one of the things that you need to be paying attention to. But because this is such a weird zone, like I said, it's low liquidity and the trend was not defined. I would just draw like dynamic trend lines everywhere just to see and how it matches up. But for now, I am biased bullish. Right. I would say I would use this trend here. I would use this previous trend here for my dynamic take profit or just the overall projection of the trend. 15 minutes down there. Let's see any 30. We have a 30. Mark up 30. This wick here is also candle hint, so I'm gonna mark that up really quick. Don't mind marking it down all the way here. That should be fine. Let's see any transition from the lower side. We have a cool, really good transition here. See how price formed this high, coming down to form the head, coming all the way up here, basically around the same area. This wick basically broke every single short-term highs previously, and then come back down here to retrace. And that's a cool retrace there. I would say from 3 and the 1, that's a really good retracement right there. And then you can enter after the price have left the zone. Or, you know, coincidentally, you see how the trend, it happens everywhere. The trend happens everywhere. So just keep that in mind, This is from 8:15, but my session is 9 to 11. So you can see how price broke through and basically slowly transition. And you have 3 minutes down here. And because there's a 1, right, it can bypass that. It's fine. After price retrace and this candle open, I would enter around here if I were to be present at this point in time. You can see how trend line breaks and just retrace all the time. So don't be worried about not catching the trade. So after that, another trend is defined and can kind of see how trend is being respected at the moment. So let's go ahead and draw that. And it is residing at the trend of these two previous lows. Something to keep in mind of as well. It can also poke through, which is fine. So it's a mixed area, I would say. It's a mixed area, and I wouldn't go ahead and take a buy or a sell in this current zone, because on the micro time frame, it seems like it's transitioning upside, and you can see it's respecting the trend really well. Let's go to higher time frame. It goes up there, and there's the 5 minutes here, kind of blocking it off. 3 minutes, see transition coming up here a little bit too high, I would say. A little bit too high here. Price coming back down. I would still bias bullish. But I want to see price come all the way down to a reasonable, Fibonacci level. So this here, see how 0.5. Cool. There we go. It's around 0.5 as well. So that's really good. There is no order block in the middle for the extra confirmation, for the extra confluence, which is one thing that you need to One thing I need to pay attention to here, and see if there are any major spots, the key levels in the middle. Um, it's not obvious in my eyes, so I'm not gonna mark it up. See a little bit of overlap, but that's fine. I'll say around 15 and 10. The zone I would mark around 15 and 10. 15 and 10. This is a 15, so I'm going to mark up as a 15. Let's go back to the candlesticks. 15 and 10. Price bounce off of the trend, really nice. Now we just need to look for a good maintenance of this level. Like I said, because there is no order block on the left on this leg of structure, and you see how inefficiency has been swallowed, and you can see still price have this zone over here, right? Still have this 2 pip, but it doesn't matter as much. What I'm trying to look for is that I want price to retrace down to an order block where the fight usually, where the fight began, essentially. So at least to this level down here. But to do that, it has to break the trend. So that's another thing that I don't want to see happening. To retrace all the way down, it has to break the trend. And now it's trying to maintain and trying to form a transition, in which case I'm completely fine with that. If it's retraced out of nowhere, then I want to see a good transition. It's still respecting the trend pretty nice, pretty nicely. 5 minutes, 3 minutes, 1 minute. Cool. It's not 0.5, not up here just yet. Looks like we're gonna break the trend. It looks like it because the pressure and the market maker, how the major algorithm works is still based off the Fibonacci. So essentially, order blocks is kind of like an addition to the market where, yeah, it's like an addition to the market where you know where the battle, where the fight began. So here is inefficiency, and market makers, the banks want to swallow up all of these because this is where they know that they will have a better time, easier time just to push through here because there is barely no orders here. People who bought in, most likely who have taken profit out, and this can be their break even, right? And so, sellers, they are going to not go ahead and sell anywhere here. So that's why when price pushes down into these inefficiencies area, buyers are pretty much going to be break even, or people have got their profit out and they will be happily accept a break even where they can hold on to the trade. In which case, after it pushes all the way through all of this inefficiency, they'll have to be touching the stop loss because entering here in this movement, your stop loss will have to be lower here. If which case, if their stop loss, they usually have their stop loss below the previous candle low or previous candle high, and so the more price pushes down, the more stop loss they will be reached. That means they will gather back up the liquidity and they will be able to sell even more. So that's basically how it works. And you can see how, if people, you see how people enter here with 1, 2, 3 candles and how the order blocks actually supports that. Yep, there's no order blocks, right? And that's why I want to see a clear transition. It needs to form a good transition. Um, in how it can do that is that it needs to break through, and there is the previous highs all the way up here, so it's not plausible. So you see how price trying to break at this current moment. There is neither any order blocks here on the top, whether we can enter in down or not. So trend has been broken, and it's hard to say. It's hard to say, but there is a big trend of how price is actually where price is actually going right now. the major obstacle with scalping is that you need to understand and see the short-term, extreme short-term trend. Like you need to know where the market is heading currently, how the transition is happening, and why. So essentially, you can see how it is being trapped in a channel right now because it's defined by 1 2, right? It's defined by 1 2. It's trapped in a channel. I can't even say the word. In the channel, and this previous trend has been broken dynamically. I would say retrace a little bit too far down here. So right now this is complex pullback, and you can see how Kano has broken through the short-term low, and it's currently heading straight all the way down here. It's gonna be hard for us to form bias at the moment. So, because I'm gonna remove this trend line because there is still a possibility that it's just searching for a better liquidity area where it can retrace once again. But this high here can be proven to be a little bit of trouble because it can't just say like a transition. It's forming transition essentially. These examples appears all the time, right? It's just market structure doing its thing. Is forming structure, which case is the same. Yeah. So at the moment we just waiting for price to come down to this order block area here. You see the examples even within the trend. I would say, even within the trend, price have been broken. Price broke all the previous short-term lows and even pushed all the way down. You can see here, right? It broke the short-term low. It pushes all the way down to the order block area from the second leg, and it can push even higher. So order blocks takes priority sometimes, trends take priority sometimes, and Fibonacci's take priorities all the time. So Fibonacci is your best friend. I would say it's probably probably the most useful tool in everybody's trading career because it's over time you will learn to not use it, but I still like drawing it because it gives me a defined look at the market instead of just guessing, instead of just guessing where 50% is, you know 50% is, where the optimal entry is, and where my dynamic take profit should be. That's the main reason why I use the fib, just to find my take profit. It's currently in the 5 minute zone, which is great. 15 is a little bit down, but we're at the candle hint. We are hitting the 3 minutes as well, which is nice. 1 minute is at the candle hint, so that's good. Right, so we have reached the area what I wanted to reach. So now it is a little bit lower at 7.79. I would hope for a retracement. I would say hope for a retracement because now it has retraced at the liquidity level here. I would hope for a good retracement before we can push even higher. This is not enough. Like I said, this is not enough here. Even though with the major bull candle, sellers or sell pressure, sell liquidity can sit up here in the 3 minutes. I don't think it's a 5. Yeah, it can sit in the 3 minutes here after the trend has been broken. So it's like a mixed area. It's like a mixed zone, I would say, because you can see from the trend, right? You can see from the trend here, pre-trend has been broken. So this is another setup, right? It's just another setup. But because we are in this liquidity zone, we are technically fighting against the trend that should not be fought against. Um, so this tick priorities. That's why scalping is much harder than day trading, because day trading you can just analyze how these big order blocks is, how the market is potentially heading, and then you can just enter in once the market reaches the 5 minutes order block here, right? It's fine. But as scalpers, we need to understand how short-term trend works, and you can see how it just retraces after it reached the 3 minutes zone of interest here. So I need either price to break all the way through, or how it can maintain this zone. Essentially, this is the major zone that I want to see being broken here on the 3 as well. So I'll just project my trade, see can how this fed out to see. I'll just project the trade at the moment. I'm not gonna enter in the trade just yet because, like I said, I need to see a clear sign of rejection for these kind of trades. And to be able to continue here, I don't think it's gonna be that great. But since I know this is a complex pullback area, anything can happen. Honestly, it can go all the way through and break through this, or it can all the way through and break through this. In which case, this bullish condition where it can break through this previous high is more likely than price coming back, price retracing and breaking through. But that's just my opinion, and it can change immediately. You can see how it reacts just like that. But not gonna enter in the trade just yet, because even if you enter in the trade, 103 is not guaranteed. You see how this one here. It's like a potential trade. Again, I have to look into it a bit later. I'm still getting on it. I'm still getting on I'm still getting on the habit of projecting and looking at trades that has potential. So that's on my part, and I think I should be able to do such a thing. But for now, I'm still kind of improving on that end. It's kind of form and projecting trades, so I'm not gonna miss a push up just like that. Because I need to see how the final destination, like I said before, 5 minutes is kind of like a final destination. If it breaks through, it has a multiple entry zones, but right now it's a little bit too low, so this is kind of like a final destination. Price reaches down here, form some candles and this good rejection sign, and you can enter right there at 1 to 3, just like that. So yeah, I see how 1 to 3 can still be in the zone and how I should be able to catch that, but I did not. So yeah, I still need to increase. I still need to train on my perception, I would say. So yeah, like I said here, price have successfully broken through, and it has more chance of breaking through anyways, because price have sit and retrace back down to the major buy side liquidity zone. And now, since price have broken through, we know that it's gonna trend even higher. So let's see if it retraces all the way back down, and that's unlikely. But if it does, then we can go ahead and enter the trade. Cool. Let's take in the moment of the trend. It's a little bit too deep, so I don't think it's gonna go all the way down there. See how it left the zone. Yeah, I need to train my trading on this zone over here. This case just kind of catch these kind of trades without really worrying too much about this previous area. I need to project my trade even more. So that's something I need to work on. Yeah, and like I said, the trend is not plausible for price to retrace all the way back down, but anything can be, anything is possible, and it can potentially retrace all the way down here, which case is a little bit too deep, and because of the trend, it's not gonna, be able to push all the way through. If price were to retrace down here, the only thing holding it back up is the trend, and if it retraces all the way down, I would say that price have pretty much continue to have sell side liquidity, and it's gonna push all the way through the previous low here. So it's kind of want to maintain the high at the moment. You see how this zone left as well is kind of using this previous support, previous resistance as support. So it's kind of like a zone rather than the whole thing. You see, I was trying to come back down and retrace, but there is no order block here. So that's why I didn't really see this as a possibility. But if you trace support resistance, it's totally can be one. When you retrace back down here, you can just set your stop loss, below this low or something. I'm just watching it. And yeah, that's what we're doing at the moment. We're just waiting for it to come back down and retrace. There's no order blocks, which is a bummer, but it's fine. Okay, we finally formed one minute OB, but that doesn't really do much for us. bouncing off the trend. Kind of like a higher trend, but it doesn't matter as much. It's currently bouncing off of it. I think we'll gather enough strength to push through. And this minus 27 here seems to be matching up with the trend as well. So that's like the overall trend that you want to look for, minus 27. Let's come back down to the 1 minute. Respecting the trend. I think it's just meeting the algo of the market. So it's trying to do the same thing on the other side. Finally gathering up enough strength to push through. So there's a big problem with these kind of entries, right? Big problems with these kind of entries because at the end of the line, my bad. At the end of the line, you can see how it's trying to retrace back, and some would say some would actually wait and basically enter a little bit soon. But I would say after the price have left the zone here, it's really hard to predict how the breakout is going to happen. So there are people who trade breakout, and I do trade breakout as well, but I trade the way that it retraced back down. So you can see how this trend is still being respected, and then how I trade it going to be price coming up and retrace back down into this kind of area here. On the 3, that is basically a wick through. How it retrace back down here, and the stop loss will be a little bit bigger. Since this is way too oversold, and the stop loss is big as well, but it is something to consider. And let's drag this all the way up. See here, even after that, it's not even 1 to 3, and so the stop loss is a little bit too big. It's not something of sort that I would go ahead and take a buy in, just because it's way too oversold, and the profit target is up here, but the market is way oversold, and it's just not the style that I used to trading. So I'm not gonna enter right here. Something I need to work on, essentially. So yeah, you can see how after the trend break, it kind of retraced back down into the 1 minute. That's the way that I trade. Not more or less of like a breakout trading strategy, but because the trend has been broken and it's formed the 1 minute OB right here. It's running in profit, but it's need to be a 1 to 3. You can see how this 1 minute order block is holding this trend up. The stop loss is a little bit bigger. I would say its market is oversold, but it's aiming for the overall trend at the moment, and the trend is at minus 27. Is a little bit higher. So it is right there at minus 27. It's right there at this level now. And see how it can reach that and then basically go even higher through the trend. It's not a 1 to 3, but we get what we can. Yeah, it's at that previous high right now. It just broke through the previous high. So I say it would have some strength to push through, to pull through, honestly. To reach a 1 to 3 is a little bit higher here. It's a little bit outside of the trend. It's still achievable, but I think it's a little bit too overbought. So at minus 27, I would have to take this off. Exactly at that level right here, I would have to take my trade off because this candle right now is really overbought. My bad, overbought. This is a sign of rejection at the moment. People are started getting out of the market. So see how this candle formed. People are started getting out because you can see how hesitation, how the candlestick is not defined and it's not going to be like this. This means some people are getting out, but now no more sellers are getting into the market. That is why the candles are kind of being fought off, I would say. So exactly like that, push through the minus 27. So I'm gonna take my trade off and I'll quote it right there. Just because, like I said before, when price have broken through this trend, you see how this order block kind of formed. That's just one of the ways that I think gonna fill the void of the order block strategy. And so you see how this order block support this trade over here. Because the projected trade is not really 1 to 3, I don't really want to go ahead and go for that. And the trend line dynamically is all the way up here. See this 0.5, 0.75. I have to work more on my projected trades and work a lot more on that part. 50 here. I'll have to lower this. I'll keep this at the moment. I'll keep it right there, as this is the full trade that I have on the charts. So I need to work a lot more on my projected trades and how I project the trade so that it reaches 1 or 3 in the take profit zone. Let me just put this on here for now. Yeah, price have pretty seen overbought and it's broke through the trend. And if I hold a trade, it would have been a 1 or 3 already. But it doesn't match up with the Fibonacci that I have before. It doesn't match up with the system that I have gotten used to trading. So again, it's a really good example of low liquidity market because you can see all of this push over here. There's little to none selling pressure coming in except for this trend break and then retrace to down to this hesitation area here. And yeah, that's basically how we did for the day. Have to work a lot more on projecting the trade so that it matches 1 to 3. Even though I have every single points, every key levels, every trend on, I have it on the charts. I still need to work on thinking faster, let's say, so that maximize my entry, maximize my take profit, so that it reached the 103 that I hope for. But since here, you can see how price which reaches all the way up. This is a sign what I have gotten out, because the minus 27, the way that it works for me, it just works, from backtesting, from the courses that I've taken. The minus 27 is like a dynamic area where I would take profit, where most people would take some profit off. But yeah, we got the trade, which is around a little bit over 102, 2.28, which is not that bad, but I don't think it's good for my strategy either. Because it had a setup here and it looks really well, so I just took it. Let me project the trade here and kind of fix how I go along this in the future. 5, 6. Let's say go to 4. I need to work a lot more on these, because this is like live situation. These are how these kind of situation is how I should be able to trade live, but I need more live trading experience to be able to project the trade better, I should say. Because here I just see the trade as 1 minute order block here, and price have just broken through, so with the retracement to the order block, right? I'm still used to the order blocks kind of approach. I should have a better understanding, and now I should be able to convert it into a 1 or 3 to the projected trade over here. So now the trade is just in the low liquidity zone, and you can see how it helps if as soon as you got the trend. So this trade here at the beginning, I didn't I did not catch it. Um, However, this trade here is something I need to put into my arsenal, and I need to look back and see here. Because this is a 5 minutes order block. This is a 5 minutes order block here, and since it bounced off of the 5 minutes order block as a final destination point, and the 3 minutes here as well, it's kind of matched up with the candle wick, and this should be able to be considered as a final destination if price break this and it kind of transition down. And so, after a few candles here, you see good rejection. This matches up with the good rejection candle, right? It's this candle here pushes down, and then there are buying pressure coming in and push price back up again. This is where I should be able to enter, but I did not, so I missed this one. And this second trade here, after the trend has been broken and price come back down and retrace, we did catch it, did not reach a 1 or 3 in what I would hope for. It did eventually reach a 1 or 3, but that's my bad on the projected trade where I should be able to do the same thing anyways. So yeah, this is where I need to work on even more. Even though I cast a trade, the risk reward ratio was not matching up. So right, but from that point on, we have some concurrent viewers here. Got a total of 3 views. Let's go. I don't know if that's from someone the same person, but we have 1 viewer right now. So yeah, hopefully you're doing well. Merry Christmas, Happy New Year. Just something to work on. Still going on the journey. Got a total of 3 views. That's a record high. Yeah, 2 views. Yeah, at this moment of point, we have broken through the trend. All the opportunities have pretty much been swallowed, and the trend is going a little bit too far. I would say this is not a trend break. This is just price being really oversold. It shouldn't really be able to do this in like a maintenance kind of trend. And because it has broken through the dynamic trend line, I would hope for price to come back down and form new structure instead of continuing pushing up, because this is not something I would really recommend trading in, because the trend line is it marks the border of where price should be, and my Fibonacci here kind of matches up. That is why I take my profit off, because the trend line takes priority in terms of low liquidity levels. And now price have pretty much broken through and continue pushing all the way up, breaking through the previous high and maintaining the trend even higher. So this is an extreme overbought market. I would not go into this and buy in anywhere until I see a good structure pushing back down once again, and then structure maintaining the level. Let's say like this, maintaining the level and continuing even downside, or get a setup, break through the previous two highs here, and then continue even higher. That's what I would hope for. All right, that's it. I mean, that's pretty much it for the current time. And this 1 hour wick here, we are approaching the 1 hour wick. And this is another day trading take profit levels. So at the moment, we are trending extremely bullish. I'm not gonna wait for a lot going on, at least another 30 minutes before we can have a structure forming. So it's just the way. The thing about trading is that when an opportunity presents itself, you just need to take it, just like this one here. But my way of prepping over here on this trade wasn't that great. Wasn't fully 100% prepared. I did not project the trade like I should have. This trade here, I should have caught it. Um, but at the same time, the trend lines I just incorporate into my trading. So still, it's relatively new into my perception. So I need more practice, more screen time, more chart time. But in order blocks kind of areas, that's why I've been able to take this trade, because I'm confident with my backtesting and with my experience. That's why I've been able to take the trade off of the order block instead of this area here where I was not used to, price not used to price not forming transition or head and shoulders in the order block itself. And at the same time here, you can see there's a 3 minute order block on the left. Let's review the trade actually. So there's a 3 minute order block on the left. I deleted the 3 minute order block here because this trade has been broken through. But from the macro time frame wise, you see it's sitting in the 30-minute order block. Over here, when price come back all the way down, I see this as a buy side liquidity zone, and so naturally, um, buying pressure would be even more than selling pressure, or even microstructure trend break, right? You can see the trend here dynamically. You can see how the trend break and then form this order block in the middle here. Um, Price coming back up, so I was divided in the middle. So either I want to see price break the previous high, or price maintain this price and maintain this price, and then form a structure and then push down. Which case, more likely scenario is going to be price pushing through, because it has retraced back down to the 30-minute order block. And so something you need to work on to combine the order block strategy with the trend lines and the trend line break as well. So yeah, this is within the zone. The 1 to 3 at the same time is still within the 1 minute interest zone that I see over here. I delete both of these because it's a little bit outdated. But yeah, essentially it is a 1 to 3 to this zone, to this previous area where I would seek some kind of transition or some kind of rejection, some kind of continuation, right? So I was hesitant because this order block here was in the way. But yeah, it matches the 1 to 3 even from this rejection here as well. So need to work on that part as well. Need to project more trades. Need to do more back testing. Need to combine the two strategy together into one perception, and yeah, project more trades and combine the two order blocks and trend line. That's pretty much it. But yeah, right now it's being extremely oversold. So I'm just gonna sit here for a little bit, see how price gonna form on a 3 minute time frame, and just basically sit around. Gonna be silent in most part here, like in the next 20 minutes. I would say 15, 20 minutes. just to look where price gonna form, how it's gonna do. And yeah, with that said, I'm just gonna be here. If there's any question, you can just type it in the live chat. The live chat. I'll get to it. Yeah, at the moment, I'm just gonna sit here, wait for price to form some structure. Do a Fibonacci there, matching up with the trend break here as well, which is nice. Yep. Yeah, I'm doing good. You find my stream through search? Yeah. sorry that for that ear blast. Yeah, I have a 50K account. Recently, uh, let me just continue here. So I got the 50K funded account, and essentially, I'm just in my journey to building up the capital. That's all. And yeah, I'm currently doing another trial at the moment. So yeah, I just feel comfortable to broadcast. So I just feel comfortable to use the platform as a way of educating people. And it's mostly for my archive. Is mostly for the future me or look back. Um, but yeah, from how did you learn here? You can add me on Discord. Right now we only have like another person here, but I'm gonna add. I'm gonna put you if you have Discord actually. I'm gonna put my Discord here. It's not a server. It's just my personal Discord. Um, add add me as a friend, and then send me your charts, the way you trade. Just essentially have if you have any questions, just go ahead and type it in. If you have a Discord, if you don't, we'll try to sort it out. Um, but if anybody else reach out to me, I'm happy to help because I've been through the journey so far. I'm comfortable broadcasting, so yeah. If you find it helpful and you want to learn the way that I trade, the way that I perceive the market, then go ahead, add me on Discord, and then send me a few charts, back test, and then ask some questions. I'll get back to you. But yeah, my schedule is Monday to Thursday. Friday is just psychology talk and small talk. Even if there's nobody here, I'll just do the same thing with myself. I'll just talk to myself and plan out the goals. But yeah, if you're here, I'll spend some time talking to you, see how we can take this far. There we go. Just added you on Discord. Okay, so back to the charts here. Right now, we are following the macro trend, and it's coming back all the way down here. I would say that it's not that great. And you see how overbought market reacts. This is exactly precisely why I wouldn't really hold the trade all the way up high because if it's go through the dynamic trend line that we have drawn from the previous two highs, then the chances are it's not gonna maintain this high for long, and people are going to start to get out. And as soon as they see a big candle here, they're going to panic and essentially sell out their position. So that's pretty much the gist of it. But then you have the trend line lower down here. I don't think it's gonna be that great of a deal. But see how this previous low, see how this will be broken. I want to watch this and see if it's broken or not. But right now is low liquidity and it's at 10, so I don't expect it to have a lot of trading so far. It's low liquidity. You see all this inefficiency immediately swallow up by the banks, so that's great, right? And the low has been broken. All right. So from this analysis here, it seems like we got peak viewers at three. Um, Something I really appreciate. After I changed the title, live forex trading. After I added a few more tags, but that's yeah, that's basically what changes the whole dynamic and get more viewers coming in. It's a live forex trading, I would say so. Um, yeah, mostly this for my archive. I can look back and from the future, and then if people, if in the future I make it big, then they can just go into YouTube channel and they can watch all the previous session that I have. So that's just one way of seeing it, I guess. So yeah, at the moment, price just break through the midi trend line, the micro trend line, and it's currently heading down, still respecting this macro trend. But after this price, after the price have pushed all the way up here, it's just gonna do this now. And so essentially, if it's overbought and the trend line has been broken through, and it is in an uptrend or a downtrend, this is a sign of overbought and inefficiency. So we're just gonna wait for it to come back down. But I did not expect it to, just pretty much rocket straight down like this and break through the previous low. But yeah, from this point, I would say this is a transition to the lower trend, the downtrend, and there is little to no order blocks on the upside as well, which is one big thing about this. There's no little to no order blocks on the Lego structure, so that is a bummer. Yeah, with that said, I'll still sit here for a little while, see how the some see how structure form, how price form some order blocks, some trends, and we can go from there. On the right, you can see my 15-minute time frame in case you're wondering. And on the left, I rotate back and forth from 1 minute, 3 minutes, 5 minutes, 15 minutes to mark up over here, and 30 minutes to mark up here. 1 hour. This is the main frame. And on the right is just the 15-minute time frame where I see concurrent, was it concurrent order blocks. In which case, if it's trending and it's form a 15 order block and retrace there, this is the time frame for it, and I like this more. ICT. Well, how do I say? It's interesting. I learned a few concepts from ICT himself, but because it does not match up with the way that I trade, and I have said this before, um, every traders have a different style. It matches with who you are as a person. So even if you study 10 courses and you have an exact strategy for every single course, and you backtest every single course and it works, but on live trading it doesn't translate, right? And you still struggle when you live trade, that means that you need to tweak it. That means you need to go back and see what is comfortable for you. And all the material, even what I'm doing right now, you may not trade the same way that I do. So That's the main reason why I would say ICT or any other courses only contribute to your growth as a trader. It does not guarantee, it does not, I'm not going to guarantee you to trade the same way that I do, the same way that he does, the same way that she does, right? Everybody else have a different style and strategy. They can say one thing and they can live trade another. And that's what happens in live trade rooms and stuff like that. Because on the course, they teach one thing and I study all the concepts, and on live trade, they trade some way differently, and the analysis does not match up with my analysis. And I've strayed away from live trade rooms. I've strayed away from signals. I've strayed away from um, any other aspect that can affect me in my own judgment. Because in this game, once the signals are gone, once the live trade rooms are gone, you're not gonna be able to hold on to it, right? You're just gonna learn to do it yourself, and the market adapts all the time. And you can see how ICT does the same thing, right? I forgot his name, but let's call him ICT just because um, he has a free course on 2016 on his YouTube channel, a whole playlist, and he trades forex. He used forex example, but at the moment, at the most recent playlist in the 2022 course that he put out on YouTube, that he trades e-mini, he trades futures and contracts, he trades options, he trades a whole different financial market, and that's just basically a sign that he has evolved. He has evolved as a trader. He has moved on, and every single year, I would say every single month, every single day, traders evolve, and we have different perception of the market because the market adapts. Just like how you go to a supermarket for say, I used the example before. The why Fibonacci acts the way it does. Why 50 is the psychological number, right? 50% off, right? Buy one, no, buy two, get one free, right? It's like a psychological thing. And because so many people are hopping on, so many people are catching up to it, that's formed the market. And market makers, they have substantial amount of money, and let's say because they have a substantial amount of capital, they need the liquidity, the volume to buy in, to sell in, to make the markets. So the market makers is the supermarkets themselves, right? They buy in, they have all these resources, and they have all of these. They make the market. Essentially, they put the stuff on the shelves. And you, as a consumer, you as a retail trader, you're just gonna see when the price is reasonable level, when it has a sale, when it's good to buy one stuff, when it's good to buy the other stuff, when it's good to diversify your basket. The same way goes with the financial market, right? So as a consumer, as retail traders, we're not going to be able to make the market just yet, right? We need to study from those. But it's a really long journey, and I don't even hope to become a market maker at this stage. Just because market making is really hard, and I see how they have done it. They're not gonna trade the same way as we do because they need a vast amount of liquidity. That's why you see how sometimes it will stop you out, and then it gather liquidity, right? It wicks through and it stop people out, and it gather liquidity, and then they buy in or they either sell in the market, right? After they have gathered back up all of those liquidity that they have taken from retail traders. And after the price have rocketed up, they're gonna cut it a little bit, and they're going to see the market a different way. They're going to make the market. As the market makers, they make the algorithm. As a market maker, they make the strategies. They make how the market is. The reason why we're able to trade the way that we do is because they make the market that way. And as retail traders, we have to understand and we have to learn that. And a lot of things with courses nowadays, especially with ICT as well. He says you only need this. He says, understand this and you will beat the market, right? And there are testimonials and stuff. I would say 99% of courses will have testimonials that they have come out on the other side and be profitable, right? You say 100 people. Of course, there are going to be one person that's going to be profitable from their trades, and they're gonna understand and analyze the courses. Um, but yeah, essentially, I would say there's no holy grail of trading. You are the holy grail. You are the market. You need to understand and just study the way that you feel comfortable with, so that when you pull the trigger and go into a trade, you're not gonna think it three times. You're gonna think twice about it, so it's sure, but you're not gonna think about it too much. And even after the trade have taken off or it stopped you out, you're gonna accept it because that's the way that you are. You trade and that's your loss. There's nobody else influencing you. If there's a signal, if there's a live trade room, and they take the loss, and you say, "Oh, you can just trust the expert; they would make it back later." That's not the way that you should go around doing this, because trading is not a game of a community. Trading is really lonely, and so as market makers, they are up there, right? They're making the market as a group. They make a market as the whole thing because they need a group of people in order to make the market. As retail traders, it's lonely because we have to understand and adapt a different way to the system. They are the system. The market makers, the banks are the system. And we as consumers, we as retail traders need to understand and adapt differently. Every single one of us trade differently. So that's just the way I view the markets. I'm not gonna say, oh, you only need my course. I don't even have a course. I'm just broadcasting this, right? And people like you would find the course. You would no, not find the course. People like you would find the stream, and you see my value. And if you are here long enough, and if I'm here long enough as well, I would be able to translate it, and you will see the way that I trade, and hopefully you would understand the market the way that I do. Um, but essentially, every single course has different educational purposes, right? You study from this one person, moving averages. You study from that person, RSI crossover, order blocks, trend lines breakout, and Fibonacci, golden zone, whatever. Watch a bunch of forex trading course on YouTube for the past 3 years. You need to understand that on YouTube, it can only go so far. Um, One-to-one mentor, one-to-one peer-to-peer, sitting down and understanding feedback, that is the golden thing. No matter how many courses you take, it's you're still gonna have to understand it your own way, right? That's why mentoring and get a one-on-one is so expensive. Um, Price action with three indicators. What are those indicators? Yeah, what are those three? Because if you trade price action, you don't need indicators. The indicators are the trend lines. The indicators are the order blocks. The trend indicators are the Fibonacci themselves. And if you stick long enough and you have free time, I will hop onto the call with you. I'll hop on the call with you and basically explain to you why the market moved the way that it does, in my understanding, why the order blocks are formed the way it does, why your indicators work the way it does, and of course, why why we as retail traders need to understand those things in order to profit our pockets. So yeah, if you really want to learn and you're lucky enough to find me in the early stages where I don't have a lot of people coming in. So yeah, that's really good. If you have enough time, you have free time, I'll hop onto a call with you. Volume, try a lot of tweakings indicators. Volumes, okay. Volumes is a good indicator. I don't think it's an indicator. Volume is by itself it is an indicator, but it's not really a technical indicator. Um, Volume is something of like a indicator for market status. It's not like an moving averages where it takes a certain amount of candles and it form a moving average in general. Volume is just the status of the market. It just tell you the status, and yeah, it helps. But I would say if you still having trouble, I would say remove the indicators and don't try to use those indicators, because if for say that indicator is not there, it's not present. And if I would be able to catch you on the street, I would give you a chart. Would you able to analyze the market? Would you able to just trade off of price action and candlestick alone, or will you need to wait for an indicator to be present to trade? So price action, candlestick, bear candlestick alone is, I think, the most powerful tool in the market. Momentum, candlestick patterns, support resistance, volume is all technical. Technical, correct. It is statistic bid ask. Um, Momentum, candlestick patterns with support resistance. So, did you manage to become profitable, or did you become, consistent with your trades, or do you still have FOMO? Do you still have hesitation when you're entering the trade? Do you have to think about it a lot? Or when a loss happened, did you still in that phase where you are trying to figuring out your sweet spot, or have you already passed through that and have the funding account, or have you overcome those fear of missing out? Have you overcome the fear and the fear of losing, I would say, and have you overcome the losses? Or are you still in the stage of figuring out what's going on, or are you still within that zone where you are uncertain with your strategy? Because I need to know that before I can, point you in one of the better directions if I can, in the best of my ability. Okay, that's fine. I was not profitable for a long time as well. Only recently, 6 months ago, I found and I have worked hard towards it. Um, so yeah, I would say if you can, free time, anytime it would, eh, anytime within today, we can hop on a call and I'll see how you mock up the charts, and I'll try to help you out. Because the way that I trade, it's uncertain with strategies, so over trading, over leveraging, fear of loss. Okay, that's good. You're being honest with yourself. You know what's going on. That's good. That's yeah. So you have overcome the. You have basically reassessed what is it is your weakness. You have reassessed what is it that you need to work on. So that's really honest. And I was struggling with that because before when we start trading, I was overcome with my ego, and I would backtest and I see, oh, this trade's working out. But then on live trading, I would lose, and I would just convince myself that the market is doing something weird, and I should be able to stick to that. So my ego was over the top, and I've learned to overcome the ego, start meditating, and then slowly reduce to working harder. I would say working harder and just see what is it that's my weakness, and I have tackled that. And since you have analyzed all of your weaknesses, that is something that I should praise you for. I should be proud of that. You should be proud of that, for analyzing yourself and seeing all those losses, seeing all those weaknesses that you have. So I praise you for that. And yeah, there's like I said, there's no holy grail trading. It takes a long time. The more courses you consume, the more you'll be distracted. So um, if you have time, I'll try to hop on a call and see and point you in the direction, and basically, because this is the way that I trade, right? I trade the all different types of trend lines and breakout, the order blocks and Fibonacci. I'll try to point you in that direction because that's my expertise. But yours, if you don't feel comfortable just yet, and it's somehow lining up, I'll try to find a sweet spot between the two so that we can work on it. Um, but yeah, other than that, I would say good job to you for pointing out all your weaknesses. That's one thing that I struggled with before. That I did not point out my weakness early on in the journey. That cost me a lot of opportunity times, quality time, where I can tweak my performance and basically be open and care less about losses and stuff like that. So kudos to you. But yeah, if you have free time, today I'm home all day today. I want to see what's your time zone is. I live in New Jersey, United States. So that's Eastern Standard Time. It's currently 10:22 on my clock right now. You can see on the charts as well. UTC -5, and it's 10:22 where I'm at. So if you have free time, just message me on Discord, and we can hopefully sort one things out, and I can basically one to one see some feedback. And if you don't feel comfortable, that's fine. If you don't feel that my way of trading matches yours, then that's fine as well. But I'll try to help you into the way that I trade because that's my expertise. I'm not gonna be able to help you the way that you trade because if it's too different, that I wouldn't be able to help you because that's not my expertise. So yeah, I'm just trying to say that, and I'm not good at public speaking because um, I wasn't interacting with a lot of people. I have a lot of chart time. I'm spend a lot of time alone in the chart on the charts and on screen. So social interaction wasn't really something I am. It's not a strength that I have. So I may be able to form a few sentences here and there, but I'm going to be mumbling and struggle forming sentences together because I have not, talk a lot with other people. So yeah, you have enough time today. It's currently 10:23. Eastern Standard Time, or UTC -5. It's 10:24 here. And I know I've been rumbling around. That's just my habit, man. I need to fix on that as well. Central Time, Central Standard Time, 9:24 a.m. Is it a.m. or p.m.? I would say it's a.m. I would think so. Um, a.m. Central. Good. Uh, okay, that's good. So you're just basically 1 hour behind. So that's great as well. If I were be able to live in your time zone, it'll be a little bit better because I'll be able to wake up more. But because of my job at the moment, I still think it's better either way. So yeah, 9:24. That's good. So you still have free time. You have free time later on in the day. I'm at home in the next few days anyway because it's company closure and they are giving us PTO for the last week of the year. So I will be able to be free until Monday. Yeah, until Monday. So if you have any free time, just message me. I'll be here on Discord. I'll be here if you message me a time, and we can hop on, see how everything goes. Yeah, basically I am a total stranger, and I know I've been opening up too much, but in all honestly, I just want means good intentions because I have gotten so sick and tired of these, courses. All these people out there, they have monthly subscriptions for live trade room. They have monthly subscription for courses for stuff like that. Um, I'm tired of that. I just want to teach the way. I just want to spread the word out there that the market is something educational and is free across the board. People have made YouTube videos here and there, but and I'm tired of the main people who have set out a subscription and people who are paying for that and seeing different results, right? There's no holy grail, and they have convinced that their courses is one of the better ones out there. I would say there's no one course. It's like colleges, it's like university. There's no one university out there that can teach you, or have good environment. As long as you're in the university itself, as long as you're in the environment of trading or in the right direction, You're gonna learn regardless. It's up to you. It's up to the students. It's not up to the teacher for the most part, right? You need to have a good teacher, but at the same time, if the teacher never speak to you one to one and they only make courses, they only make um, the curriculum, and you just go into class and study on your own pace, and you need to be really hardworking. That's just the reality. You need to be really hardworking in order to achieve something without one to one, peer on peer. That's why mentoring. That's why having a personal person that has been there before and have gone through it, mentoring you and basically going through the same process is so golden. And that's just what I want to get out there. I will try my best to help every single one of my viewers who have found my stream to be able to trade and have something of like an educational thing, and then you can use your own time to backtest, your own time to live trade and translate it into your own results. That's what I want at the end of the day. And so the forex market, in the forex environment, people have stained this financial market a lot because it is linked to scams, it is linked to signals, it is linked to a lot of different shit that I do not want to, step my foot into. I have tapped my foot on the water and I do not like it. And so I've spent most of my time backtesting, I spend most of my time, fine tweaking my own way of perception, my own way of trading. And so I've been coming out of the market by myself and not with a lot of courses. I have paid for courses, of course, but I don't think you should be able to pay for courses anyways, because with the material on YouTube itself, um, that should be able to let you in the right direction. It's just that courses that offers one-to-one mentor, right? One-to-one mentor, the courses that offers you to be able to schedule a one-to-one with the person who make the courses. That is what the value is. You need to be able to separate those two. If you buy a course and it's just a course itself, you're just jumping onto another school. You're just jumping onto another university, right? You're jumping onto another curriculum that there is no person there for you to guide you into the right direction. So at the end, the course's value is value at the one and one, like one to one, peer on peer. You need a mentor, and you need another person who have been there before. That cuts a lot of um, corners for you, and basically point you in the right direction in the early stage. If you if you've been able to figure it out in a short amount of time, then that's like basically a genius, but nobody would be able to figure the market out in a short amount of time. Even a smartest person in the classroom, even the one geniuses in like technical ways, they would not be able to analyze the market the same way, because in financial markets there is no set way of trading. As soon as you find something, it's just up to your ability and your confidence, and that's just the way it is. And I know I've been rambling a lot, but I'm just tired of all the courses out there that they have money on there, but they don't offer you one-to-one, peer-to-peer mentoring. That's the value of the course, is to have one-to-one mentor. And if they don't have that, then that course itself is basically thrown out the window. And I've been through two courses so far that has one-to-one, and that helped me tremendously. They have feedback for me, and that is what I appreciate. All the courses out there and they don't have one-on-one, that is basically something I stray away from. Um, so yeah, no, I've been rumbling a lot, but thank you for being here. Thank you for stepping onto the stream. Really appreciate it. And yeah, I would hope for you have some free time. We can hop on a call and see how and where your trading is, trying to point you in the right direction. And all good intentions. I'm not gonna try to point you out to something else. I'm not trying to sell you anything. It's just me. Why I started a YouTube channel a month ago, and why do I keep streaming while there is nobody watching? Why do I keep saying shit if there's nobody watching? Right? There's no zero viewers. There's nothing. So why do I keep doing this? It's for me. That's the main thing. It's for me. It's for my archive later on in the future when I look back and I see how far I have progressed, I see this landmark, and I can, point out the value to myself. That's the main thing that motivates me is self-interest. In financial markets, it's self-interest most of the time. Why do people put money in different investment? It's for themselves, for their own gain. And so I do streaming like this, and I have actual results on the chart, and you can see it from this session alone. Um, you see that I do it for myself. I don't do it for others. So I don't do it for hoping for a huge amount of viewers. I don't do it hoping for something that would change my life because trading itself can change my life, and I do not need courses. I do not need to sell anything. I am confident in my ability to be able to make money regardless, and I have enough experience in the market in order to do so and give back the help that people need, regardless of money or not. And yeah, that's my point of view. If you're still here, um, thank you for hopping on. But yeah, it's still 30 minutes before the session is over. So let's get back on the charts. Enough shit talking. After the price have broken through the previous low here, you see how price broke through the previous low, the micro trend. We have a 1 minute order block here. You see how that matches up really nice with the trend. And price coming back up to the interest zone because the stop loss is way too big. I would wait for a smaller area and then before entering in once again. And because we are at this zone, a 30-minute order block, or even 1 hour, I would suppose, 30 minutes and 1 hour order block, we are still within the area where price can retrace. This is where you need to pay attention to, right? There is a micro breaker structure. There's a micro breaker structure on the trend. And of course, it's break through the previous low, which is the major thing. It broke through the trend, broke through the previous low, coming back up here once again. But the major thing is it's sitting at a 30-minute order block. It's sitting at a 3 and 4 hour order block where the majority of buy side liquidity is sitting in on the macro time frame. And macro, it is trending upside, right? So the chance of you selling here and price pushing down once again is going to be a lot similar. So I do not want to sell in here because the range of this, if I were to sell here, the signs are not that clear, but let's say around there. And then my stop loss will be around 4 pips. I want to have like a solid stop loss. My 1 to 3 will be able to reach all the way down here. And the range is still achievable, but because there are so many there's so many order blocks along the way, we do not have a set amount where we can set our take profit. You can see right here, that's 50%. That's discounted price right there. That's how ICD trade as well. So you can see here, it's not 50, but up here, that's 50%. And if I want to sell in here, correct? If I want to sell in here, matching up with the 1 minute where I have done before, where it's oversold up here, because it is sitting in a buy side liquidity zone, the chances are the micro time frame is not going to work out. And here you can see a Lego structure from the low to the high is 50%. It's discounted price, right? So your take profit would have to be anywhere in between the 0.5 here. And if there is an order block, this 1 minute is too much. If there's any order block or any sign of retracement in between the 0.5, that means that chances are it's not gonna push through and continue pushing through because the trend line on the lower on the macro time frame is trending macro just like this, bouncing off 1, 2, 3. The fourth one, and it even have the buy side liquidity zone. So chances are it's not gonna push through and break the trend line just because it breaks through the micro. And I'm going to go over the previous session yesterday actually. So yesterday, let's go back here. I don't think it's, hold on. Yesterday I was backtesting. There is a really good trend example I want to point out. All the way back here. Okay, that's fine. I'll do another session later tonight on backtesting. But essentially, along the trend, along the macro trend, there is minor breakouts. And the same thing goes for other trends as well. This is a minor breakout, right? Minor breakout here. And you can see how it lines up pretty well. And people trade this as well. People trade and have courses on this as well. They break out and then come back down, retrace on the trend, come back up once again. There are many macro, many micro trends and breakouts along the big macro trends, and so the mini trend does not dictate where the direction of the market. The order blocks and the macro trend dictates where it should go. Like the larger the time frame, the more the stronger the order blocks is, the stronger the push is, the stronger the move is. So essentially, when price coming up here, you need to understand what's your risk analysis, right? This is not a good area. And immediately off my head, I would not take a sell here because along the way, price have been extremely efficient in selling out and basically swallowing up all the inefficiency. It has been extremely efficient at balancing out the price. So who am I to think the price gonna retrace and push all the way down here into this level, right? The stop loss here is way too big, and we're currently sitting at a dynamic trend line. We're sitting at a buy side liquidity zone, so we are going to look for buys and not sell. And in which case, that trade here, that projected trade, was not presented, and I was able to talk around with now worrying too much about price, worrying too much about the liquidity, and like I said before, just hold for price to form some structure for us to base off of. So right now, there's nothing on the left. On the 3 minutes, there's no structure, but we have the 1 minute here, in which case it marks something really efficient. So I would use this as a dynamic trend. You can see how price broke through there. And let's see go down on the 3 minutes. And let's see in 15. No, 15 is forming. 5 minutes is just like that. Not that great in my opinion. Price form, bullish engulfing, this candle here. Until I see this previous structure being broken. Let's mark this as red so we know this curtain. Price break through the trend, come back down, retrace. Excuse me. Come back down, retrace that point. And it come from that point on, retrace and continue pushing upside. And I'm not comfortable taking the trade if it's not 50%. You see how price still retrace regardless. This is the projected trade from before. It was not breaking through the trend. One thing in mind is that everything needs to line up, and even if I'm confident with my ability, I need to see if it matches up one of the major aspect of my perception is to break at least the dynamic trend line needs to be broken. In which case here, the trend was not really, it was not broken. Needless to say, it was not broken yet. The previous high was not broken yet. The only sign is after it's have pretty much pushed through the previous high, gather liquidity, gather all the unsold orders here. Price pushes back down once again into this trend line dynamically. There is no order block in between. There is a 5 minutes, but that is a little bit too big. So I would always hold for a 50%. And price did not come back down to 50%. So that's why I did not take a trade here. And even if I take the trade here, where would my stop loss be? Right? Where would my stop loss actually be? So that's just something to keep in mind of in the future. Oh yeah. I recently have like few months earlier, when I'm comfortable, I started the YouTube channel. I started the live streaming just because it has helped me as well. And like I said, it's mostly for my journey. But if people find it, I want to help them as well. So essentially, yes, I am, back testing. I back test every single day. Even after the session, I back test. Today I have free time. Tomorrow I have free time. I back test all day. After the live session, um, I was able to continue back testing. You're working on and still improving the entry. Well, I want to improve the entry because my projected trade recently I have incorporated trend lines. It's like a week ago, and I'm still working on backtesting the new and trying to combine those two trend lines and order block. It's harder to do so, and I have been able to get the trades on point. I've been able to get those on, but at the same time, my projected trades are not exactly where I wanted to. Like this trade I've caught here is a little bit over 102, and it respect the order block, and I feel more comfortable taking the order block. But at the same time, I need to get away from that comfort zone and project my trade earlier. So it's a 103. Essentially, it's still take profit. It's still there, but the projected trade and entry, I need to fine tweak it a little bit, and of course, there's spread involved as well. But in saying honestly, it's just up to the entry. It's just up to how I perceive it. So I need to fine tweak it so it is at the stop loss, is like 4.5, 4 pips, 3.5. I usually do those set stop loss instead of just like point 0.2, point 0.3. I want to set the 0.5 increments. And yeah, I have been able to identify these trades precisely, but I have not been able to combine the order block and trend lines fully 100%. It's like a 70% entry per position. So right here, you see how it matches up. The trend lines and the order block, it matches up. But the entry and the projected trade, the stop loss right here is 5 pips. I can reduce it to 4 pips if I know my take profit level and my entry area. So that's just one thing I need to tweak on. To projected trade still take hold over, and of course the spread in live trading as well to get into account. But the projected trade or the trade that I set beforehand needs to be a 1 to 3, and so I need to get on my feet, get on my head to just do more of these two, just to combine the trend lines and the order blocks. And in low liquidity market, it's hard to say. This kind of situation doesn't happen a whole lot in a normal condition, because oversold market like these, usually it forms structure along the way, but sometimes it will form like this, and I need to combine those two. Just recently, I have trend lines on my chart. Before I only trade order blocks and dynamic Fibonacci. That's pretty much it. But I recently, 1 week ago, I have put my trend lines here, and it have helped me tremendously, have improved my profit, um, and probably helped me a lot in terms of identifying more trades and more precise trade, and just filling in the void where I have been able not been able to fill in before. Trend lines been able to fill it in. So before I don't have trend lines, I just want to see the previous structure, previous high being broken. So after it been broken, um, I look for retracement at 50% precisely, and even below 50% at the discounted price, and I enter from there. But now, after the trend line and I see how it breaks through, I am a little bit more comfortable taking trades after breakout and after it formed like this. So these are the kind of trades I've been able to be more comfortable with instead of waiting for a full retracement downside into 50% down here. I would have missed the trade because this low liquidity, right? Last week, this the last week of the year, um, there's not going to be a lot of liquidity. So essentially, instead of waiting for price to come back down to 50% after price broke through the trend, like all the way in the middle here, I'm been able to be more comfortable taking trades and taking risk as soon as price break through. And this is where I should be able to take the trade and ride the price up. So it's just one example that I need to tweak more into entry. But that's pretty much it. In terms of identifying the trend, in terms of identifying the short-term trend and be more cautious, I've nailed it. I just need to identify and basically fine tune my entry so that it matches up with the 1 to 3. My standard, you can say, my standard is a 1 to 3. So yeah, I'm still working on that, work in process. but it's like a 70 completion. I just want to fine tweak it a little bit more so that it matches up to 1 to 3. Um, yeah, that's pretty much it. I've been able to identify and take in trades off these pretty comfortably. I don't need to think twice, think 3 times about it. And yeah, that's pretty much it. I need to combine and work more on my entry, and it's not about stop loss anymore. My stop loss are still good. My stop loss are still below, and my take profit are still there. It's just that my entry zone, the main point of determination for the risk reward is in the entry zone, and taking into account the spread as well. It needs to match the projected trade at 1 to 3. So working on the entry zone still a work in process, but that's something I'm not to worry about because through time I will be able to fine tweak the entry. The main thing is just a stop loss and risk management, which that is out of the window a long time ago. So yeah, if I see any trades along the way that matches 50%, and it matches my old strategy, my old way of perception, trading with zero point 0.5 Fibonacci and order blocks, I would take it because I'm more comfortable taking that way because I've been trading that for over a year, and have more confidence in taking those trades. And recently, I've incorporated trend lines, and what is it? What's the other one? Hold on. Yeah, stop, sell, stop, buy. When price is reaching that point, you're at the back. So price and market try its best. Um, So let me go ahead and think about it. So I don't use buy limits or buy stops or sell stops just because the slippage and the spread. I'm scalping. I'm scalping day to day. Keep in mind, I'm scalping the trades. So as a scalper, market execution and spread is the main way to go about it. If you're day trading, the sell limit, sell stop, buy limit, buy stop, that works out because it try to covers up all those spread, right? So it entered your trade at the precise zone minus the spread. So essentially here, taking the same example, GU usually on FTMO terminal, it has around 1 pip, a 10-point spread. So it could have missed my trade. It could have missed my trade at 1 pip, at 1 point right there. It's trying to cover up that same amount. As scalpers, I want to be there, physically be there when the trade is right there. So it's like market execution. I don't use sell limit, sell stop. But back to the question of 50% Fibonacci. Yes, I use Fibonacci, and that's the exact same thing. I think that's the best tool you could ever have as a trader, as a retail price at the premium. But if some point like this one right here, take the same example, time frame. I would hope for it to come back down. Is a 15-minute order block, so let's say around there, and let's say a 5 minute order block forming anywhere in between. Hold on. Okay. So if there's any order block in between, so let's say a 15-minute order block here at 50%, I would hope for an order block to be here. But if it's as soon as a trade, break out and then come back down, retrace, you can either take the trade upside to 1 to 3, trade take the trade and break out and into the oversold market and get the take profit, and I will take the risk of price even coming back down and stopping me out, and I can enter the trade later on if price come back down to 50%. The 50% and below is just a dynamic. It's not something I base extremely on. Um, and SO is a minus 27. It's just where people mostly take their profit off. And you can see up here when price slowly retrace off. And through backtesting, I've seen that even if there's no key level, there's no trend, there's nothing, at minus 27, price still sell off. So that's how I've been based it off. My strategy is based around the Fibonacci. Order blocks and trend lines and all the other stuff is not, it's just basically a component. It's like an add-on. But my strategy is based on off the Fibonacci. So on fair value gap imbalance candle, price is trending up and breaking back to that area. Are you taking buy limit at that order block? Mm, yes and no. It depends. That's my That's my answer there. It depends. Um, it depends largely because, like I say, I need to wait for. I say I need to wait for transition. I need to wait for a good candlestick to break out at least. So the reason why I did not take this one right here is pretty much self-explanatory. I'm gonna pull my notes up on the perception of trading. So trend lines. This is one of the things I am still working on, the trend lines and stuff. But the reason why I did not take the trade here is because I do not feel comfortable taking it. That's the main reason. I do not feel comfortable taking it because there was no order block in between. This trade here was not 50% retracement, right? It's really right there, but it's matched up with a trend line, which is one thing that I need to work on, and I still need to backtest even more, be more comfortable taking these kind of trades. But because I do not feel comfortable, and I'm more my roots is based on order blocks and um, discounted price from point 0.5 and below. That's my roots. Right now, I'm trying to plan another tree based on the trend lines. So I do not feel comfortable taking the trade just yet. So essentially, this trade, this lack of structure here, from a low to the high, this zero point 0.5 Fibonacci was not reached, and there was no order block in between. Let's go to 15-minute order block. That was 15-minute order block was forming. So you can see here, there's nothing here. And 5 minutes here, this is the 5 minutes, and the stop loss is way too big. And as a scalper, I do not want to take this trade because the stop loss is humongous, I would say. Stop loss humongous, 12 pip stop loss, and take profit wouldn't really be that profitable. And so it's not the same way. It doesn't fit into my trading strategy. So I did not take it. And at the same time, even though it matches up the breakout in the future, after I feel comfortable taking these kind of trades, I will be able to put my word, put my mouth where my trade is. But at this moment of time, I can say, oh, I should have taken this trade because engulfing and stuff like that, I could have, I should say, and I say, oh, I'd be egoistic and say put a trade right there, and it should have been, an entry. But because I'm not comfortable and I do not feel comfortable putting my mouth, putting my action and everything I base on these, kind of situation, I would not put my mouth on there because I do not feel comfortable and confident enough to base my strategy on this just yet. And by all means, it's an engulfing on top of the trend line, and it just bounced off of the previous structure. So by all means, for other people, it could have been an entry, right? Could have been really much an entry right here after this engulfing candle, going up, and stop loss right below here, right? The market's to 1 to 3, and call it another trade. That's good, right? But that's because I do not feel comfortable taking this trade, and it's not 50%. It's not around 50%, and there is no order block at that area. I do not feel comfortable taking this trade just because the engulfing is not really my area expertise just yet, and because it's deeply in the short-term bearish trend. You can see all this pushing down, right? This is bearish trend right here, and so I would say I do not feel comfortable taking this trade all the way up to 50. I consider both sides. So from the upside to the downside here, you see 50% sitting right there in the middle. This is where I would set my dynamic take profit essentially, but this is where I would set my take profit overall. So I do not feel comfortable taking the trade just yet. So I do not want to put my mouth on there in case later on I would take the same trade and I would lose over and over on the live trading. I need to have more time back testing on those stuff. But essentially, the Fibonacci and the order blocks are the two that I base off of. So yes, um, it depends. It depends on the candlestick and how the candlestick form. So right here, this is another example here, really good example. This one, a trade I could have caught, but again, it's bouncing off the trend line, right? It's bouncing off the trend line. I do not feel comfortable taking the trade just yet. That's why I do not take this trade. And so that's why all the way down there, this is where I should have taken the trade because I feel like this is the entry I should have taken. There's a 5-minute order block here where I'm going to zoom out for you. But this is the zone. This is the candlestick where I should have taken the trade. This is by all means. this is the candle, the 1 minute candlestick. This is a hammer, right? You can say all these different kinds of patterns, but the candlestick here is a huge rejection from the downside. After this candlestick pushed down, these three continuous black candle, especially this big candle right here, it means that there are selling pressure at the moment, right? I would need to look for a sign. I don't feel comfortable just yet. I need more backtesting on these kind of trend bounds. And so, I want to see price have a huge bullish candle. But another sign is that it can have rejection like this hammer right here, where you would say, at the beginning of the candle, when it's open, there are sell side pressure from this previous candle, right? These previous candle right here is pushing the pressure down. So this is how the wick has been formed. The wick has been formed like that because there are sell side pressure. As soon as it's reached around here, there are buy side liquidity coming into the market once again that push price up, and it formed a hammer right here. And this should have been an entry, but because I don't feel comfortable taking it, and after price have pushed all the way up here, it's too late for me because there is a 1 minute order block and a 3 minute order block here that sanction the area where it could have continued. So it is another projected trade. So I need to form my entry better, projected trade even more, and have more chart time on these kind of live trading. I need more experience. I need more live trading experience in order to project more trade that reaches 1 to 3. And this, by all means, because there is a 1 minute here, I can still trade within the range without all worrying about price retracing back, having any sign of continuation or rejection. It doesn't matter. As long as it reaches 1 to 3 and is still within the range of caution, then this should have been a trade. After this hammer has been formed, a good amount of rejection, that is a sign right there um, for me to enter in the trade. So this one I did not catch, and I should have caught it because this here is a caution zone and it's within the zone. It's a 1 to 3. I did not project the trade right because it was on the trend line. Need a lot more work on that and backtest even more to feel comfortable around this. So just keep that in mind. I'm not perfect just yet. I'm not perfect. I'm never gonna be perfect. Um, but just in case of something happens, this should have been an entry right there, and I I can only fine tweak it so far. I'm still in the early stages, but I feel comfortable putting my mouth where my trades are, and yeah, that's pretty much how I've been able to identify these kind of trades, and it builds my confidence well. Even though I did not take the trade, um, even though I did not take the sell, no, my bad, take a buy right here. I feel confidence now because I feel more confident because price have retraced from there. It bounced off of there, so I feel a lot more confident in that regard because it has matches up with my projection. It matches up with the overall perception, my perception. So it strengthened every single one of these trades that I missed. It also means that it could have worked out. That means that if I enter in the trade, I could have made profit. So either way, it strengthened my perception. So it's a win-win situation. Um, so yeah, that's pretty much it. From this point on, it's already 11. I usually end the stream. I'm sorry for rambling a lot. I just feel like rambling is not really a good way to um, point out my way of trading. But yeah, this can be another macro trend, a head and shoulders. You can clearly see here, price with the previous lows, coming back up to this level and potentially form a structure and then push through once again. So anything can happen. It's like extremely subjective. The market is extremely subjective. So essentially, the market come pushing up here, still maintaining the macro trend, but low liquidity market. I wouldn't really go too much aggressive on this. So I would call it a day. We caught this one trade here on the left of this breakout. That's a 1 to 2.28. Not something I wouldn't be too proud of, but we did catch a trade, which raised my confidence a little bit more, which is great. So yeah, with that said, I'll end the session for today. I'll backtest even more. And today is Thursday. Yeah, today's Thursday. So tomorrow, it's just a small talk session, future plans, and planning out in the future where um, what I need to do in the next week, my plans for the next month, and the overall outlook. And yeah, it's just motivation, optimistic, staying optimistic, and yeah, overall, it's life in general. Just enjoy the journey, enjoy the ride. Don't be too caught up in the moment, and don't be mad about your losses. Just that life in general, trading has been working out for me. So essentially, that's something that I feel calm about, is because trading can change lives, and it changed my life. It's slowly changing my life so far. So really grateful that I found this market. Really grateful that I found the platform itself. So tomorrow is just future talk and plans for the future, and outlook for the market, and outlook on life in general. And yeah, with that said, I'm gonna end the session here. And thank you for joining me, the one viewer. Thank you, Jeffe. That's how I pronounce your name. If it's wrong, I'm sorry. Thank you, Jeffe, for hopping on. And you can reach out on Discord, chat after hours. But I'm gonna end my stream here. And thank you for watching. Thank you for being here. And what I say, I'll see you tomorrow, hopefully. Just subscribe and click on notification in case I go live. I always go live on 9 to 11 anyway, so just keep that in mind. Thank you for being on, and I'll see you tomorrow, hopefully.